Welcome to the Father's Day 2019 Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, President, McGowanGroup, NetWorthRadio.com, and your financial weatherman. Today, we're going to go through a financial tour of the capital markets that you just can't get anywhere else, including a special update on our Texas Black Gold Rush and the Shale Revolution and its relationship with inflation, what it means for portfolios. First, Dow Jones Industrial Average. The rally kind of stalled this week. You can see the June rally here. It was about 1,400 Dow points lickety-split after this sell-off right here, and it stalled around 26,100 this week. One of the factors that is key to the financial markets right now, this is inflation. So if we look at what just happened to inflation, we've got 1.8% trailing inflation year over year. And we see on the finished goods producers about a 1%. So inflation is below the Federal Reserve 2% target. What does that mean? Well, it means potential rate cuts. But you can see this longer-term trend in inflation. We're actually going to go a little deeper to the impact of energy and what it means for you and I. Let's take a quick look at one factor. That is gasoline prices. National average here, $2.73. I went to Gas Buddy this week. It's getting near $2 a gallon here in the Metroplex. And the worst that I ever saw, or the lowest gasoline price I ever got, was in Lampasas. It was like $1.35 at ExxonMobil. I always wanted to drive back to Lampasas and fill up again the next day. All right, so this is an inflation lead. And look at this. Boom. What we've seen recently may pull the inflation lower, and that factors into the Federal Reserve numbers, short-term interest rates, and part of this equity rally was the speculation the Fed would cut rates. The exact opposite of last year. The Fed's going to raise rates all year. Let's look at this. Okay, Bloomberg probabilities first predicted at the end of 2018, after the mini panic, that the Federal Reserve was more likely to cut rates. That was contrary to everything we were hearing about 2019. What's ahead? Look at this, 68% likely in the July 31st meeting, they're going to cut rates by 0.25%. That's the cash rate, the T-bill rate, the overnight bank lending rate. And even here, we got a 1 3/4 probability coming up at September 18th. That's 60% likely that they're going to go down to 1 3/4. That's a 0.5% down on the cash rates. We've been getting a cushy 2.3, 2.4% in the best paying money markets. That looks like it's going to come down somewhat. But it also means high cash flow assets, and specifically potentially global high yield, which does have price risk. The money market does not, but global high yield does. But there's still so many yields out there over 6% in that category. That could be the bargain beneficiary. What's the other category? Energy. Let's take a look at energy's impact on inflation. This is minus 7%. That means prices fell 7% across the nation in the last crisis. Look at this. That's nearly 7% plus inflation. You can see back there the impact of the 1970s. Nixon had price controls on oil. We had to sell it here for $6. Global price was $30. And of course, we had an energy shortage. And Jimmy Carter's peak inflation rate was 20%. We saw that bounce to 15% back here. And then inflation longer term in what appears to be a downtrend. Energy is one of the primary components. And when we go back to, say, a 1990 scenario where interest rates spiked, that was one of the factors, the Gulf War here. Well, let's take a look at the longer term trend on energy. This says that the inflation rate is expected to stay somewhat low, 2.2, 2.3. Whoa, Fed, what are you thinking? Gasoline prices way down, and inflation's actually sitting not at 2.3, it just came in at 1.8. So these forecasts are subject to change, and that's opportunity. Now, unemployment rate at 3.4 projected for next year. Guess what? That's not a recession, at least not yet. All right. One of the factors, Texas employment. What you see here is the amount of energy that the United States produces. Production, consumption, about 100 quadrillion British thermal units poised this year because of the Texas-based shale revolution. We're going to be net producers of energy instead of net consumers. That is great news for the U.S. Energy self-sufficiency. Yes, you have to add in natural gas liquids to get there. Boom, look at this natural gas production. Huge factor here. And exportation of liquid natural gas, one of the big stories for the next 10 years. And we've been taking advantage of it with energy infrastructure, which has high cash flow and we believe lower risk than speculating in oil companies. You can see the crude oil production here skyrocketing after the shale revolution got underway 2005 to 2007. Boom! Over the past 10 to 12 years, huge increases. Congratulations, USA, for energy independence. That means controlled inflation. The dangers of the 1970s have dissipated because of the U.S. innovation and a free market economy. That is the other category we'll highlight. Take advantage of what's happened in energy infrastructure and high cash flow, not without price risk, but that's our job to help you manage that. And of course, with money markets over 2%, there is a safe place for the safe portion of the portfolio. Join us at NetWorthRadio.com. We go more in depth, and we have a Father's Day tribute for Papa Dean coming up. And my son was in town. He's helping me with that at NetWorthRadio.com. It's worth tuning in, at least to that second section. I'm Spencer McGowan, your financial weatherman, president, McGowan Group. Join us each week right here at YouTube.com, McGowan Group. My firm, McGowanGroup Asset Management, sponsors NetWorthRadio.com and, of course, our YouTube channel under McGowan Group. Some educational disclosures and discussions that I wanted to add to the broadcast. The first is, I'm very proud of our team, including Stephen Norris, who will be added as soon as we redo the picture. He's our newest team member. Come down, meet the team that cares, get a written plan, because the securities we discuss, the financial news we discuss, that's not a recommendation until you actually come down and get a customized plan at the Crescent. You'll get a tour, and we look forward to seeing you. We're going to cover value at risk of loss in portfolios, and you can see it right here. Learn about our performance, what happened in 2008, how long did it take to recover. All of those items are posted right here at NetWorthRadio.com or the McGowanGroup.com. The other part of the program, when we look at price fluctuations in bear markets and risk control, that's a huge part of NetWorthRadio.com. We look forward to helping you advance your plan and your cash flow. Come down and meet the team that cares.